All right, thanks for standing by. Now, just real quick, remember with what we discussed here today, it's going to be for general informational purposes only. Also understand that our examples will be done in the Paper Money software application. Our focus of what we talk about here today is really going to be focused a little bit more on growth. Now, we know over the last couple of days to weeks, some of those growth areas have been sold off. For a fundamentalist, maybe a technician as well, that's what they might be looking for, okay? And we're going to kind of talk about that. When we talk about growth investing, we're talking about capital appreciation, right? If we're talking about value, we're talking about stocks that actually have maybe low price levels. Now, with recent drops in the market as of lately, to some degree, some of those prices might be compressed, but there could still be some potential value, okay? And when we talk about income investing, clearly we're talking about dividend distributions, etc. Now, so today we're going to focus a little bit more on the growth areas. Now, let's go ahead here and just hop right in. First off, so if we look at, let's say, the S&P 500, and we use the S&P 500, it's really just a gauge of the market. 10 sectors, right? There's unequal representation here, meaning certain sectors matter more than others. Tech and discretionary, the heaviest for sure. If we look at, let's say, the S&P 500, over the past couple of weeks, we've been neutral. We've been saying for the last couple of weeks, the market, the S&P 500, is neutral at best. This is a stock picking market. We don't just have the broad index going to the upside, making new highs. It's really stock picking. It's trading right now, okay, that we're seeing in many of these names. Now, when we talk about, let's say, the S&P 500, I couldn't imagine going bearish yesterday morning you're thinking some investor out there is thinking, my gosh, this is going to go down, only to see the tail, okay, bounce back quite aggressively yesterday, and we're right back in the range. When you pull up this chart, and I'll share this chart with you, when you look at, let's say, the S&P 500 on a weekly chart, we finally touched the 30-week moving average. This is a simple moving average, the red line, and the first time we've touched it since last May. Now, is that unusual to finally touch it? No, okay. But we kind of arced back a little bit, had the moving average catch up to it. Look at, just real quick before we look at our example, you look at the Dow Jones itself. Do you think somebody named Bill was watching that? Okay. I mean, could you imagine going bearish yesterday at the open? You take a look at the Russell. You got to say about the Russell 2000, we haven't even pulled back to the 30, okay? And remember, I am on a weekly chart here. I'll share these charts with you in just a sec. Just want to show you the charts, but we haven't even pulled back to the 30. So if we said, is there an index that's been stronger than other? If we're talking about relative strength, one that's gone down less than the others, it's the Russell, okay? Surprise, okay? Now, I'll share these charts with you. Just hold on for a sec. We will. Now, I want to kind of talk about some, just real quick, some sectors that are kind of standing out a little bit. Now, if I were to ask you that question, which sectors to you are standing out? Why do we care? Well, because when we come to our examples of looking for companies that are profitable, we would like to know where we're going to probably find some setups. So if I ask you that question, where do you see, okay, sectors that are maybe starting to show some strength? What would you say? Well, I think the one thing we got to point out here is if we go back to, let's say, a daily chart, let's bring this back up, daily chart. One of the areas that's getting a pretty decent bounce is discretionaries, okay, better bounce. You look at technology a little bit, I'm not sure if I'd say it's a bounce, kind of choppy a little bit, but it's bounced back off lows. Some investors like that area. That's really not what I'm thinking about. The area that some investors might be looking at is transportation, okay? $DJT, that might be an area. Now, clearly, if we said discretionary sector, like what? Well, we're going to go to just real quick, let's say Market Watch. We're going to go to where it says visualize. Now, if I click on Market Watch, visualize, and now remember, we could just go to the S&P 500 itself, and this is going to give us more stocks. If I said, look, just give me less right now, and let's open up the S&P 100, and let's just look at, let's say, consumer discretionary. Now, here's a smaller list. Here's what I love about this. Sometimes it's not, it's not hidden, right? One of the ones that we've been talking about for the last couple of days, plural, probably 2 weeks, really is the AMZN. And what you're now going to notice is today, we did actually see that stock really get above that line of resistance. And the line of resistance was, survey says, 210. Poked its way to the upside. How do we know it so quick? Triggered the alert today, okay? So if we take a look at that, we're going to come back to that in just a moment, but there's a couple other names. Now, before we go into some of these areas like discretionary, technology, and transports, etc., I want to kind of just give some quick points on a couple items. So first off, I just want to write this down so we're crystal clear as far as what we're actually looking at and what are some of the differences, okay? Now, if we talked about, let's say, what drives trend, I think a lot of investors might say, James, what kind of drives, what can drive trends is company's revenue, its earnings, all of the above, okay? Make this as big as possible. There you go. So I want to kind of give some quick terms. Gross profit, okay? We're going to talk about operating profit and operating profit margin. I'm just showing these first because I need to kind of set the table. And if we look at this, gross profit margin, this is going to be gross profit, okay, divided by sales. Now, when we actually say sales, clearly we're saying revenue, okay? Now, you need to understand what these are to get to what we're going to talk about. Operating profit, okay? And by the way, you can look that up and kind of say, what is that? Divided by sales. And the last one that many investors really want to know is net profit margin, okay? Now, by the way, these terms we're going to bring up on the platform, net profit divided by sales, okay? Now, when we look at gross profit, operating profit, net profit margin, are these looking at yearly stats per se, or are these quarterly stats? We got to at least know that first. Are these annual? Are these every 5 years? These are quarterly, okay? So if you said, James, I'm like a shorter term type of trader, this is really looking at quarterly, okay? So if you said I'm short term, okay, days to weeks, then you're really looking at these margins, and this is really giving you a quarterly snapshot of what is going on. Now, not everyone is focused on that time period, hence the topic. Now, when we actually take a look at, let's say, things like return on equity, okay, and when we take a look at return on assets, the equity, just real quick, is the assets minus the liabilities equal the equity. And so we want to know, this is kind of a gauge of management effectiveness. We want to actually know how much are they making on the equity of that business. Numbers or percentages such as, let's say, 12%, okay, minimum, 15% would be good. And if we saw 18% plus, this is strong growth, okay? So if we saw, now it's going to be expressed in a percentage. And when we really take a look at this, it's suggesting if we have higher numbers, better management efficiency of, they're taking the equity of the business and they're making a return on it. Why does that matter? Because that's what could be driving the stock growth, the trend. Now, when we take a look at the assets themselves, we're really taking a look at this. We're taking a look at the net income, okay? Net income over the assets. Now, when we take a look at the net income over the assets, let me go back to this. This return on equity is net income over equity, okay? So here we're just saying, no, we just want to know what's the net income divided by the assets, and those percentages would be 5% minimum for some investors, not all. 7% would be kind of good, and then let's say 10% would be strong. Now, that does not mean that they're always going to be at the same level, but we're just going to kind of put them in those categories and see if we can't find some. Now, the first thing is, as investors, we're technicians and fundamentalist investors. Now, if we take a look at this, I want to kind of show you something that you might not be made aware of. Now, if I go to, let's say, Market Watch for just a second, just Market Watch, okay? So we're going to focus just a quick bit on scanning. And then what we're going to do is kind of take that scan and we're going to go to the Market Watch. And then we're going to go look at these from a fundamental technical standpoint. Now, if we go to, let's say, Market Watch, I'm going to go to quotes. Okay. Now, some of the things, I just want to make sure we're all on the same page. Now, the platform that we're looking at is the Thinkorswim platform. You can download this right off the schwab.com website. Now, does everyone see this little drop down right there? That drop down right there, you can save the columns that you want to see. So here I just have just a list of stocks. The list of stocks that we have is, let's say, Dow Jones, okay? And that's just a public list that all of us can access. And I just went to Dow Jones. I'm just using a basic list. Now, if I go to Dow Jones Industrial Average, that list of stocks is going to pull up the same for all of us. Now, you can customize that column heading based upon what is it that you're trying to see. Well, in this class, we're talking about fundamentals. So we would like to kind of see some fundamental metrics that we could kind of filter some of these stocks with to kind of see how profitable they are, okay? Now, how do you customize the heading? Well, you can right-click on that and go to Customize, right-click anywhere up here, anywhere. Right-click on any of these, any of them. Right-click, Customize. And when you right-click and Customize, you can look up for a column, and you can put a column on to what you want to see. Now, things that I put on here was return on equity, like we're talking about. Return on assets, like we're talking about. Net profit margin, we just talked about that. Earnings per share, that would be kind of important, especially if you want dividends, especially if you want actually maybe a trend that might be growing over time. Earnings yield, why is that important? Well, that's the earnings per share, the trailing 12 months divided by the current stock price. The higher the percent, maybe the more value it might have. Dividend amount, okay? A lot of us like to look at dividends. What is the dividend payment? Dollar-wise, the yield is looking at percent. How often does it pay the dividend? Price to earnings and so on. These are some metrics that someone says, look, if I'm going to invest, I at least want to kind of know these things, right? Now, the one thing I want to make sure we're all crystal clear about before we look at our first example, if you click on the drop down there, you're going to see where it says Save Column Set. And if you say Save Column Set, it's just going to take what are on the column headings right there, and it's going to put those, it's just going to put that in the name, okay? If I say save that, it's now going to say, okay, do you want to save that? Yes. We click on that drop down, and now you see that it's right there. Now, but what if you said, James, I'm kind of more of a technician? Fine. Well, one thing what you're going to notice if I click on this, which is that technical setup, if I click on that, now it's changing it back to what we normally see. Now it's filtering these stocks from a technical standpoint, like relative strength, like is it bouncing? Is it crossing over on a moving average? Is it breaking out? Any potential price pattern. So if I just go back to this and say, now it's kind of nice, you can go up. And if you go up, it goes back to the fundamental setting. If you go down, it goes back to the technical setting. I just want to make sure you know about that, right? Now, I wonder if you said, hey, one of the ones that's kind of standing out to me is AMZN for just a moment. Well, if you do Control Spacebar kind of highlights the line. And so if I went back and said, let's go back to fundamentals for just a quick second, it's going to still have that line highlighted from that previous list. So if I went up and said, hey, another one I really want to take a look at here today, example given is, let's say, a stock like Cisco. Now, if I click on Cisco and do Control Spacebar, you're going to see that it puts a check mark in the box over to the right. You see that? Okay. Now, if I go back and kind of screen this technically, there they are, highlighted. So I'm using the fundamental columns and the technical columns. Now, let me, if I said just real quick, if I could, let me just see something real quick. Okay. All right. Now, what I want to do is, how can we actually scan for some of these companies? Well, so one obvious way is if I just had the column heading on there, right click on the column heading, go to customize, and now what you're going to see is we could just type in return on equity. And what you're now going to notice is that's just a column heading. That is a way to kind of see visually what are the returns on the equity for the company of the Dow list or the return on assets. You could also, for example, go to scan it and just type in the numbers that you want to see. I'll show that after our first example. Now, what you're now going to see is if I kind of widen this a little bit to say that we're looking at return on equity, these two companies that we're going to look at here today is Amazon and Cisco. The return on equity is over 18. If we look at let's say the return on assets, you're going to see that they're about 7 each, okay? Now, there's maybe some pros and cons of this. Yes, it's showing profitability, it's showing management efficiency, but wonder if the business has been around for a long time, right? They might have scale, okay, where they actually have large businesses and they might have some equity, assets that might be at some historical values, okay, that might be lower, that's helping these numbers. So that's one con. But if we kind of look at these numbers and kind of say, look, equity has actually been strong, at return on assets is about 7-ish%. When we look at profit margins, okay, double-digit percentages. This is not forward-looking. This is trailing, meaning the last 4 quarters. Now, if we pull this up, and I'm going to go back to Amazon for just a sec. Now, remember, as a fundamentalist, some investors who like fundamentals, they like to kind of see things that have pulled back and maybe things that are starting to go back up. Is anyone out there that likes to do that? Well, some people like to, right? They might be saying, look, I'm looking for maybe the price that's gone down to maybe make those multiples, price to earnings, etc., a little bit more attractive. Now, what we're going to do in this case is we're going to right-click on the stock graph, okay? Now, what I'm going to do is I'm going to bring up that ticker right in the paper money account. And what I'm going to do is, let me kind of take off these past examples. Now, this really came from yesterday, okay? So it's showing us the order there. Let me kind of take that off, which is, by the way, that's an interesting tool unto itself. So let me kind of just take that off. And what I'm going to do is I'm going to right click on that chart and I'm going to go buy custom and I'm going to go with OCO bracket. Okay. Now, what I'm going to do is let me just cancel this just real quick. And when I right click right on that current price, buy custom with OCO bracket, we're going to try to do a buy limit order at the current price. Now, could the investor have done this morning? Could they? Yeah. Did we talk about buy stops? I think we did. Did we talk about buy stop limits? We did. Okay. Now remember, go to my X page and you'll see I did a 9-minute video on what those are and why an investor would consider maybe considering that. Now, if we take a look at this, now we see it breaking out. Well, you got 215.23. That's saying that price or higher. Is that true? No. That price or less. Now, if we go to, let's say, limit, we're saying, look, we're willing to buy up to that price, but no higher, okay? Now, the other thing that maybe an investor might be asking is, well, James, it looks too high. Now, you guys and gals know that I love that. When someone says too high, I love that, okay? Now, let's just double check, okay? Now, remember, the way we kind of gauge too high is we like to go back to the moving average envelope chart, okay? Now that moving average envelope chart, we're looking at the light blue line, which is the 10-day exponential, okay? That's usually a gauge for momentum. The yellow line is 3% above that 10-period moving average. So if someone made language like it's too high, we can't say it's too high. We're not even at the first line yet. So that would be a deny, okay? So what happens is sometimes investors become a little bit uncomfortable. They're like, yeah, it looks high, okay? But what it really also comes back to is they didn't have alerts and they didn't have any buy stops, okay? So we're going to go data GTC, and I'm going to try to go back and kind of put this right there. Now, there is where we gap down from. There's kind of where we gap down to again. These might become lines where some investors try to take profit at those areas. Do we know that it's going to go up to those areas? We don't have a clue. And we're fine with that. So the fact is, we never know what's going to happen on the right edge. It's a forecast. And what we're trying to also do is saying, where are we going to admit that, hey, the trade is not going the right direction? Some investors might say, where have we recently pulled back to? Answer is about 203. If I take about 203.09 and we set a stop less 2%, it's going to be 199.02. Well, if I take 199.02 right there, 199.02, dated GTC, there's the stop. If I put my target, let's say at 232, now James, why did you put it a little bit lower than the target? Because I'm planning on that some other investors out there might be thinking 233. This paper money account is trying to get out ahead of the crowd so I could try to get their position sold. Now, could it go up higher than that? Maybe, okay? But it's trying to actually have, we know that support or resistance, it's an area. Now, if we go back and say, well, how much capital could we actually put back in? Well, let's kind of go with the number that we've been working on the last 2 months, which is about 7,500. Now, if we take 7,500, it's going to be about 34 shares of stock, okay? Now, remember how that stop works. The stop is saying if we go down to that price or less, sell the stock. It's not saying that's where it's going to sell. That's a trigger to sell. You can fill at that price or lower. Confirm send. And now we actually see that stock trade right there. We know it's stock because it tells us 3 times. 3, okay? Send the order. Now, what I also want to go back to, and I'm going to show you kind of some quick references. So number one is if you might be thinking, well, is this like a one-off class? Or is it like, do you do other classes? Well, we do other classes, okay? So if you go to YouTube, youtube.com, our channel on YouTube is called Trader Talk Schwab Coaching Webcast. We push our videos out to that channel on YouTube. When you subscribe for free, you're actually going to see that you can click on that search and you could search for different topics that we've actually taught historically, okay? Now, if we take a look at this, so that's first. If you have not subscribed, just do that. Second, if you actually said, can I plug into maybe other classes that you've done historically? Yes. This is going to show you the playlist. This is no different than on TV saying, I have my favorite channel or show, and you can go back and watch previous episodes of this class called Growth and Value Stocks. That's the show, Growth and Value Stocks. These are the previous episodes. Okay, now, the one thing I want to kind of make sure is if we said, well, could you share these charts with me? Oh, I'd love to, okay? I'm a sharing person. Now, I'm going to share this grid with you just real quick, and let me just show you how to put it on. Now, by the way, if you're watching the recording, I will also put this in the, I'll check that. Okay. Now, where do we put this on, though? So, go up to the very top right, go to Setup, Open Shared Item, and what we're going to do, let me show you that again, Setup, Open Shared Item, and if we click on that, kind of paste it back in, we're taking what I sent to you in the chat, and I'll send it again. Just put that right there in there. And we went to Setup, Open Shared Item, copy and paste, Preview, and import that. Now, when we import that, what it really does is it's going to pull up those charts that we're using. These charts, what you're now going to see is it's going to be right here. Let's maximize that. Now, if we said, well, how do I save it? I'm going to go to these little boxes right there, and we could just go Save Grid As. Now, Save Grid As, and what we just call it the package of the charts, 2026. Okay, save. Where did it go? That's right there. And you're going to see, there it is. Okay, so I want to make sure that you have those resources. There's some great charts on there. Speaking of some other charts. Now, one of the questions that came up just real quick was, the RTX. So why does this come up? Well, obviously with the U.S., with let's say what's happened in Iran, Israel, in that region in general, some of these aerospace and defense companies, Lockheed Martin, Northrop Grumman, and many others, they've been a focal point, okay? Now, when you look at, let's say, RTX, wonder if you wanted to make a list of stocks that you like, and you wanted to filter these companies. Well, let's do that. Wonder if we said, look, I don't look at Dow stocks. Now, that'd make me sad, but okay, fine. How can we make our own list? We're going to click on the 3 lines, create a watch list, okay? So click on the 3 lines, create a watch list. Now, your homework assignment right now is we're going to make an in-class watch list. The first ticker you actually gave me was RTX. Now, if I can have one, I'm going to type in CSCO. I'm also going to type in Tesla. I'm going to also type in Meta. Give me some of those tickers that you want to look at. I'm also going to type in Netflix. I'm also going to type in T-Mobile. Okay, now, any others that we should add? Any others? Now, guess what we're going to do? We're going to look at these fundamentally, and then what we're going to do is take a look at and kind of, do we see a technical setup? Now, I want to give you a moment just to kind of type those in. Yeah, let's type in NOC. Okay, perfect. Josh actually kind of brings up GE. Now, let's bring in this twin cousin here, GEV. Okay? Now, the other one is PAAS, the silver, Pan American Silver. Ooh, glad you brought that up. Coin. The other one is AVAV. Familiar with that one as much. Exxon. Okay. Now let's just bring up a couple. Now the one other question was, where do I now? Let's kind of take this and say save. So what it's now going to do is we can look at this on the fundamental view. How do we bring up that list again? Well, on the right hand side, or make a list, click on the 3 lines right there. 3 lines. How do we create a watch list? Click create a watch list. Okay, and if we do that, we can now just name it and then type in the symbols. Now, wonder if you want to add symbols. Okay, now I'm glad you brought up this one. My gosh, GLW. Okay, so first off, let's look at a couple of these. I didn't take everyone. Let's say we got 10. If we're talking about some companies that have been really fundamentally putting the hammer down, if you will, well, one of them is return on equity. If we're talking about one of the highest in the list, if we click on that, it's GE. The second one is also Netflix, which we're going to come to. The other one is its twin cousin of GE, which is the GEV. Okay. Now, if we went to, let's say, return on assets, and we clicked on that and said, what do we got? One of the other ones we actually see in there is return on assets is Meta. Now remember, I want to look at, let's say, Meta. So let's say I want to look at Meta, and I click on that with my cursor. Do control what to actually highlight that? Put a check? Control spacebar. Wonder if I want to take a look at Netflix? Control spacebar. Now, when you look at the fundamentals, it also kind of tells us something about, if I look at the net profit margins, those are like some pretty healthy margins, 24, 30% earnings per share. Okay. You got 23 on Meta, 253 actually on Netflix. We see that Meta does pay a dividend, no on Netflix. And when you look at a PE of Meta, you got a PE on a growth stock of 28 and Netflix there at 37. So even with the decline of actually Netflix, that actually PE is still high. However, it has been higher historically. If we said of these, which one, if we kind of said, now you brought up GE, etc. GE is at 38, GEV is at 36. If we're talking about growth stocks, that's not necessarily super high, but it's up there a little bit. If we kind of said, well, look at a company like Exxon that has done quite well. It only has a PE of 17. And that's pretty normal if we're talking about energy stocks. The reason why they don't typically trade at a high multiple of the earnings per share, the price in other words, is because the oil price is all over the place and it's hard to really forecast what the company's revenue and earnings could be. That is pretty normal, okay? Now, what I'm going to do is let's go back into this list for just a second, and I'm going to come back to Meta. Now, remember, if I brought up Meta, okay, so we're looking at the fundamental list. How do we know we're looking at the fundamental list? Well, you got the fundamental columns headings. How do you go to the technical columns? Well, go right there. Now, remember, if I bring up Meta, we're now looking to kind of see the technicals of it. Technicals is where we're looking at the price, performance, the relative strength. Is it bouncing or breaking out, crossing over? That's technical language. Now, if I look at, let's say, Meta, we see the year-to-date returns, week returns, 4.5% for the week. Down for the month, though, but a push up on the week percent. If we look at, let's say, the trend, prices above both moving averages. Relative strength the last 2 weeks has been green compared to the S&P 500. And if we actually look at kind of, let's say, what about the Netflix? That has also been 24% in the last week on Netflix. Is that even true? That seems high. Let's just double check this. I got to see, is that true? Okay, changed my mind. It's probably true, okay? Went up a little bit more than we thought. Now, what I'm going to do is let's go back to Meta for just a second. If we looked at Meta and said, hey, look, we're going to look and see, can we see a bounce spot on this chart, okay? Now, if we zoom in for just a moment, if we were going to take a ruler and actually said, where do we see some resistance levels? Resistance, I mean, I think most of this where we gap down to, it's kind of right around 673. Anything above that, where do you see? Well, probably you're talking about right at 704. Anything above that, we might say in the vicinity of 738. Now, you kind of think about this return on equity to return on assets. The return is expressed in, let's say, net income, like net income over equity, net income over assets. We want them to grow that net income, and that growth can actually come by happening to get higher earnings per share. You grow the earnings per share, you could actually push up the valuation of the company, which might cause the stock technically to go up, okay? It's not magic, okay? Now, if we take a look at this, let's say the investor says, look, I'm going to try to buy some here. Why does someone buy some before the resistance? Well, it's kind of like the 3 examples we did below the resistance of 210 on Amazon. Some like to wait until it breaks out. Others like to build a position before it breaks out. It's also known as dollar cost averaging. I mean, right? Now, what we're going to do in this case is we're going to buy those shares or some shares below the area of resistance. We're going to right click, buy custom, and we're going to go with OCO bracket. Now, when I do this with OCO bracket, what I'm going to do is I'm going to put the target at where we saw the resistance or one of those resistance areas. If we said, where do we see a resistance area? It's probably right about 704. The next level resistance, 730, 738 or so. Now, I'm going to put it at a lower target. What do we got? 704? 704. Okay? Now, you might say, James, I'm going to put my target a little higher. Fine. Remember, if we do it lower, greater probability it could go there. We don't know if it's going to go there. The second thing is, what about the stop? Now, remember, when we look at a stop, we're saying in the last couple of days to 2-3 weeks, where did the stock pull back to before bouncing back to the upside? Well, where did it pull back to? It looked like it pulled back to about right there, and then got a little bit of a bounce. It pulled back, red candles. And then where did it start to go back up? It kind of, if we had a ruler, and if I draw a horizontal line, where did it touch a couple times? And the answer to that question is right around 638. Now, some people like to set tight stops. We're not a fan of that, okay? 638, 50, less 2%, okay? 625.73. 625.73. Now, in our rationale that we use in the paid money account, we would rather have a looser stop, okay, and have lesser chance to get stopped out versus a tighter one And you think by the math, it looks more favorable, but you got to remember reward to risk ratio is a fabrication of reward to risk. It's not stating the probabilities. It's just looking at the numbers of potential reward, potential risk. It's not stating what the probability of hitting those numbers are. Now, what we're going to do is going to go back to, let's say, the dollar amount. If we said on a typical example that we're using $7,500 worth of capital, we're going to take $3,750. Why not the whole position? Well, we're going to try to say, look, if you can break out, let's say above 680, we're going to try to add to the position. And so in choppier market conditions, a lot of experienced investors are not going to get in all at once. They're going to try to use their capital over time. The whole idea is you show me more trend, that investor will show more capital as the stock is proving itself in the trend. Now, kind of wrap this up a little bit. So when we talk about gross profit margin, net profit margin, operating profit margin, net profit margin, those metrics of profitability are on a quarterly basis. Those are important because it gives us a touch point more recent. But when we look at, let's say, ROE and ROA, now we're talking about more intermediate to long term. How is the company's management doing in actually taking their assets and equity and getting a return on that, which then affects earnings per share, which then actually affects, do they pay a dividend? Then does it also affect the trend of the stock price? And it's a means of comparison to the company itself, but also you can compare the stock compared to its peers as well. And investors really want to know is which company's management team is really actually, its strategy is working in getting returns. Okay. Now, if I go confirm and send, you're now going to see that there's the position. We're saying that price or less. We got a target. Now, I'm not saying everyone was going to put 704. You might take something higher than that. And then I got to stop at 625. Remember with the stop, if it goes to that price or less, sell it. Okay. Now, let me kind of show you something. As investors, we kind of all maybe are at different levels. If you went to, let's say, Schwab.com. So let me just do this just real quick. I'm going to go just real quick, Schwab.com. Now, if you go to Schwab.com, right at the very top, you're going to see where it says Learn. Haven't even logged in yet, right? If we go to Learn, you're now going to see where it says Schwab Coaching. Now, if we go to Schwab Coaching, you're now going to see that a couple of us coaches here. There's a Scottish-looking guy right here. He's not wearing his kilt. He will be shortly, though. Camera, that's just good fun. Okay, and now what you're going to see is right there, it's going to say live webcast and virtual workshops. Now, if I click on live webcast, you're now going to see that it's going to show us different topics that are taught over time. It's a calendar, right? Now, here we are today on Wednesday, and we actually had a class on really understanding ROE, ROA, and value metrics. Now, you're going to notice the managing an option portfolio coming up next. That's on options. Trading price patterns, Mike Fairborn. Getting started with the Thinkorswim. How do I learn about Thinkorswim? Cameron May, who's with us, is going to be teaching this afternoon. You can join. Now, let me make sure to send this page out, okay? Now, here's the nice thing is if you said, James, I would like to learn based on skill level. I am a beginner. I know nothing, and I know nothing. Well, that's fine. Go to beginner, and what it does is it takes whatever classes we categorize as beginner. Here's the class we have for beginner. If you say I'm intermediate, it combs those out. And if you actually say, look, I'm advanced, it combs those out. So you can pick on your skill level, but you could also pick on and say, look, Cameron May is my favorite instructor. What class does he actually teach? And it would show Cameron's schedule or anyone's schedule, okay? James Boyd, when do I teach? And it shows the classes that I teach, and Cameron teaches right there. Make sure you get used to that page so you can plug into the resources. Some of you might say, I didn't even know this existed. Well, that's what we wanted to show you, okay? And welcome. Now, just real quick, last thing I'm going to point you to, if you said, James, are these all online classes or are there in-person events? I sent to you that link in the chat. We do have live events for Schwab clients, different parts of the country that are free to actually go to on different topics. Make sure you actually click on that to learn more. You can actually register for those events. They're free for Schwab clients. Those are live. Meet other investors like yourself in those areas. Now, I'm out of my time here today. Remember, Brent Morris is actually coming up next. Today, our focus was on looking at profitability metrics, okay, on a quarterly, on a longer-term intermediate basis, ROE, ROA. We also showed some functionality of really using the Market Watch tab and actually setting up a fundamental heading and technical heading and using those both to toggle back and forth to find those setups and also some performance metrics. Now, remember with what we talked about here today, it was done for example illustrated purposes only. We did 2 examples here today. We did Amazon and we also did Meta. If we had a little bit more time, we might also even look at Netflix. So with that said, remember with what we discussed, it's been awesome to share this time with you. And thank you, Cameron, for answering those questions in chat. If you'd like to learn more about the Thinkorswim platform, join Cam this afternoon as well. And with that said, stay tuned for Brent Morris coming up right at the top of the hour, managing an options portfolio. Wish you a great day. Take care. Bye-bye.